Hey, everybody, and welcome to the InvestED podcast. I'm Danielle Town. My dad is out today, and I thought it'd be a great opportunity to talk about something that I've been reading a ton about. I know I've mentioned it a couple of times on the podcast because I'm obsessed, and that is the insane wisdom from the letters of Warren Buffett. So I'm not going to go through all the letters. Don't press stop on your podcast app. I promise not to go through all of them. If you want to know what they all say, of course, you can have access to that on the archive of my InvestED Practice newsletter, which is at newsletter.danielletown.com. But today I'm going to talk about one particular piece of learning that I kept on over and over and over taking from these letters because it's so important to what's going on with our market today, and that is inflation. So I started reading these letters, and the first one I started with was 1977, simply because that's the first one that he offers on the Berkshire Hathaway website. Easy, simple, thought about starting earlier, but decided I wasn't going to torture myself or any of the other members of the InvestED practice too much, and that we would just start with what Buffett wanted us to start with, and that was 1977. So I got into 1977 and realized quickly that it was a much higher inflationary time than has really existed during my lifetime. Really since I've been around. I mean, I was born in 1981, which had high inflation, but I was not terribly aware of it. So in my sentient years, I haven't really had inflation as an issue. And so starting back in 77 and reading, he didn't really mention it much in 77 or 78, but in 79, when inflation got up to 11.2%, he wrote most of his letter about inflation. And my take of it is that he didn't mention in 77 or 78, not because it wasn't important, not because he wasn't dealing with it at Berkshire Hathaway, but because he was writing these letters in a public company as a new sort of out there kind of public leader. And I think he really wanted to just focus on what was happening in that company, which is what those letters are about there. What's happening in Berkshire Hathaway. He doesn't get into larger pronouncements. But then in 79, I think it was such a major world-changing, potentially, situation with inflation and the currency in the US that he had to write about it. And in a funny way, because it's such a negative situation, but in a funny way, it gave us the Buffett we know, because that's the first time that he started writing about larger financial issues. And then that led to many letters about accounting and financial issues in the macroeconomic world and political issues then later on. He didn't get into political issues for a very long time, but eventually started talking about financial political issues. And then finally becoming kind of the Oracle of Omaha that we know him to be. So it kind of, in a way, I think started with his comments on inflation in 1979's letter. I recommend going and reading if you're interested in really diving into his inflation comments from that time. 79, 80, and 81. Those are fantastic letters. And then 83 also, he talks a lot about inflation. So here are some things he said in the 79 letter, which were really just warnings to us. It was saying, like, this is a big problem, guys. Pay attention. And his warnings are not mild. His warnings are like out of the gate, like never mentioned this before. And all of a sudden he says, hello, this is affecting the stability of the American currency. This is a problem that potentially affects the stability of the future financial system. What he says is that inflation, as it grows higher, and here it was at the time of this writing, it was probably a little bit higher than 11%. He says that that runaway inflation on that level means severe doubt about the future of the financial instruments in that currency. So long-term fixed interest bonds that are in dollars may not continue to serve as a financial instrument at all. They may become obsolete. So he's sending these massive flare warnings out, saying to other investors and to people interested in Berkshire, we don't know actually not only what's going to happen with the stock market, we don't know what's going to happen with the underlying currency here. And then he says there's no corporate solution to this problem. There's no corporate solution to the problem of growing inflation. As the currency becomes more and more worthless, companies do not have a method of dealing with that. They just have to deal with it. They have to do the best they can. That's what he says. And I'm going to read you a quote because this is actually from the 1981 letter. He says, inflation acts as a giant corporate tapeworm. That tapeworm preemptively consumes its requisite daily diet of investment dollars, regardless of the health of the host organism. Whatever the level of reported profits, even if nil, more dollars for receivables, inventory, and fixed assets are continuously required by the business in order to merely match the unit volume of the previous year, in order to merely match. The less prosperous the enterprise, the greater the proportion of available sustenance claimed by the tapeworm. Oh, it gives me shivers. Okay, so what do we do about this? It's bad, right? And I'm not saying this is the situation we're in right now, but this is what he wrote back then in the late 70s, early 80s. And I think it's instructive because we keep hearing these giant warnings. So what do I do when I hear giant warnings? I try to educate myself. So here are his solutions. These are from the 1980 and 81 letters, and then a little bit from the 83 letter. So 3 points here. I'm going to give you the 3 points and then I'm going to get into them. 1 is choose an investment that is indexed to inflation. Now, okay, I'll comment on that in a minute. So first, choose an investment that's indexed to inflation. 2, choose an investment that has very little debt. 3, shift the measure of your success from earnings, which no longer mean anything, to actual gains in purchasing power. Okay, so let's go through those 3. First of all, as I scroll up here, number 1, choose an investment that's indexed to inflation. Okay. I mean, yes, this is like every Buffett and Munger thing ever. It's like, thank you for that piece of information. How simple, but not easy. And then he says, so after saying that, he says, very few investments are indexed to inflation. So here's what he gives in detail to look for here. By the way, I do not have a list of companies that meet this criteria. I wish I did. I don't know if he has a list of companies. He did not give one at the time. I think he says over and over these kind of companies are very hard to find. But I think knowing what we're looking for is important. So he says that this kind of investment is one that has its earnings increase consistently with raised prices. And here's the key, without adding any additional capital. So its earnings increase in proportion with its raised prices. So it can raise prices. It still makes money on those raised prices. And it does all of that without adding in additional capital. And then he says Berkshire Hathaway is not a company that falls into this category, which I think is funny. And again, I'm saying this is from the early 80s letters. So it's not a comment on Berkshire Hathaway right now. So he's looking for companies that essentially convert earnings into cash without putting any more of that cash back into the business. And over in the letters, he repeats this point that it's a company that can continue to make money, can continue to raise prices, but can do so without putting its cash back into the business because it's going to need that cash just to survive. So as inflation gets bigger, as it intensifies, he says, this is a quote, more and more companies find that they must spend all the funds they generate internally just to maintain their existing physical volume of business. There's a certain mirage-like quality to such operations. However attractive those earning numbers, we remain leery of businesses that never seem able to convert such pretty numbers into no strings attached cash. So again, the more money they're putting back into the business just to maintain their volume, the less well they're going to do as that money becomes worth less, which is what inflation is.
You guys, if you enjoyed this video and you feel it was valuable in teaching you more about how to invest, hit the like button and please share the video with your friends. And if you want more investing content, subscribe to my channel. And don't forget to click the button on the screen. We got a free gift for you. Thanks again for watching.